Everybody, Brian here, looking at the analysis for May 3rd. Just wanted to go over some of the things that were caught by my little basic system. First was the news of the UK service sector. Pretty well the PMI hit new highs, recent highs, and as a result the UK pound climbs. So if I can find with the completion of a hat trick, remarkably strong PMI reading, adding another fuel to already resilient pound. Following blah blah blah, construction, manufacturing, today's PMI reading went a long way to disprove the post Article 50 of the Euro Brexit slowdown may be resigned to. So there may be some growth here. And there's, as it says, some resilience there. Okay, now let's talk about more of the emerging markets, because it's where it seems a lot of the emerging market, it's kind of choppy right now, but a few days ago I put up a chart showing how the Taiwanese market's probably one of the hottest, or the best performing stock exchanges in the world right now. Just got an alert today on how it is beating out India. So we'll talk about that in a little bit and some other areas of interest. All right, so the first one is Brazil. Brazil stocks jump. Now, when you look at the recent year-to-date and the daily change, check out this. This index has done really good. 2%. About a week ago, identified that both Mexico and Brazil were places to be, and here we are proving that, where the Brazilian market's up 2%. So if you're trying to meet daily moves, positive moves of 1%, you would get them through investing in these areas, through maybe an ETF short-term hold with the Brazilian Bovespa, as well as the MSCI Latin America. Also, when you look at the Real, it's doing not bad, 0.68%. Now, we also identified Argentina as another place to be, of 0.62 as well on a daily move. That's not bad at all when all the other ones have not been as strong. The peso, we've also identified that there was a lot of volatility there because of Trump, but comparatively it is up year to date on that exchange. So not too bad little calls there, and continuing to watch both Argentina, Brazil, and somewhat Mexico, specifically on the peso. So let's go over to Asia and see what's going on over there. Just wanted to talk about, if you've been following me for a while on the fundamental analysis, if you've known about the fundamentals of basic trading on terms of foundation, you know when there's a China supply, demand supply, obviously that there is a knock-on effect on the value chains that I've always talked about on the value chain of the supply. So here's a great example. China concern on demand of oversupply for both nickel and copper that I just posted. And as a result, the FTSE miners listed on the FTSE get hit. So that's just another fine example of the knock-on effect of what can happen on these concerns coming out of China, the government, and let alone has an effect on the industry that supplies that demand. Very classic fundamental trading, that if you had a system watching these news items coming out of China and anywhere else, you'll see and predict and forecast that if you saw this coming, you knew how to trade it on that call, on that news event, and you knew and you were correct on the probability of that, and you were to short the miners listed on the FTSE, you would have done well. All right, so continuing along with China, some other news of how they are going to clamp down on their bonds. Some of the quotes here from this article, Fox Business. And here's the scary part about China, no official data. There was a couple things that we need to be aware of about China. Recent storm lies fresh criticism from regulators of the plethora of investments products sold by banks with the promise of higher returns and standard deposits accounts delivered. So right there, and we'll talk about the shadow banking system, particular focus on not so entrusted investment pools of customer money that Chinese banks hold some of their balance sheets and channel to outside asset managers to invest. Does that ring a bell on 2008 with the hidden asset-backed mortgages? Sounds like a hard house of cards to me. Regulators are concerned they have helped stoke markets for corporate bonds to soybeans in recent years. Well, there's no official data on trusted investments ended between 5 trillion to 6 trillion won, 726 to 871 billion by the end of 2016. According to this broker, at least 80% has been funneled through China bond markets. Ouch. So you need to be aware of that. They represent just a small slice of the shadow banking system, which regulators are trying to shine more light on, whose assets as of mid-2016 stood at 58 trillion. 8 trillion. Wow. 82% of GDP, ratings agency estimates. Shadow banking has been growing very quickly. The gray area is becoming less gray. Okay, so this could be the little tinderbox that brings it all down. These were also mentioned at the recent Milliken, is it Milliken? In Beverly Hills, where all the lovely hedge fund managers and asset managers congregated to. There was mention of that as well. Okay, I'm not going to go into this any further. I'll keep the link up. All right, so let me see if I can find any other negative news before we get into the positives. Oh yes. Okay, let's talk about India. India has a lot of potential, but they are nothing but a basket case society, it seems, and it's really unfortunate. Jim Rogers was wanting to invest in India. He's no longer. He's pulled out. He wants to put in a more trusted, higher producing, better performing markets. His money is in Russia right now, which I kind of would agree with. But here's an example of where India once again drops the ball. If it's not their productivity, they're a growing population, they have growing middle class, but here's the problem. Rigged realty market. Check this out. Manipulation of supply. Lock-in periods of transfers stop original from reselling their properties, reduce the effective of homes at any given point. Hefty transfer charges, blah, 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 blah. Okay, not only that, but there's another article about how India home developers were promising projects to get completed, and they're not. And now the government just recently announced if these home housing developers don't get their act together, they can face jail time. That's how bad it is in India, where it's rigged and manipulated. Pretty sad. Okay, so again, as I said, let's focus on the promising markets. One of the interesting areas, I've mentioned this about Pakistan, their markets have gone up something like 50 times, but nobody ever talks about it. This one's quite interesting as well, where we have the Philippines just hit the record for 2017. So they're just hitting that now. And this is another example of a region to watch for. I'll do another video, but I'll give you a hint. It's also Indonesia's another one. this is where the growth is. The performance, if you've seen my recent chart that I put up on an article that showed both the DAX, German DAX, as well as the Taiwanese, if you compared the performance of the S&P 500, it would be up 12%, and I believe the other one was 6 or 8% on the S&P. So there's better performance in these other markets, and this is where the growth will be. And of course, when you look at the effect on, let's say, the Philippine currency, as well as the Indonesia rupiah, or maybe even the Taiwanese market is another big one. It just goes to show that they're interesting markets to watch. So there's that. Now, here's another interesting article that came out mid-April. Now, I can't guarantee this, but what I find interesting are these markets are the one that are most attractive. Maybe, I can't say, but the ones I would be watching are definitely Philippines, Indonesia, and probably Vietnam, and of course Thailand. It's one of the better performing stock exchanges out there. I'm just trying to see if there's anything else that I may have missed. I think that's it. Okay, so we're done. All right, so I'll do another video and see what's in that one. Talk to you later.